It looks like we're not going back to work. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's check out this article because it's discussing, well, the impact of hybrid work on the property market. Now, I've always been interested in commercial property, particularly investing in them via real estate investment trusts. But now if everyone can work from home, are we going to need these offices? Remember when, well, COVID, one of the good impacts of it has been the fact that people now work remote, people do Zoom meetings, people work in the office and at home and have more flexibility. And I think, honestly, that's been quite a good thing. But let's have a look. Maybe commercial property won't be that good an investment for the future moving forward. But then again, population growth is growing here in Australia, so we'll have to see. Investors in the Asia-Pacific commercial property market are feeling the heat as rate hike headwinds take hold, with Australia feeling the brunt of its impact. Global property consulting firm JLL has found that commercial real estate investment in the APAC region contracted by 30% year-on-year during the March quarter to $27 billion. JLL's latest data has revealed that Japan outperformed the rest of the region, notching $8.9 billion in investment activity for the first quarter. The figures were up 4.7% year-on-year, supported by a surge in office offloading by Japanese corporations and acquisition activity by Japanese Real Estate Investment Trusts. Look up REITs if you're not familiar with them, guys. It's an interesting way to get exposure to property and to real estate without putting all your eggs in one property, one basket. Hashtag not financial advice. Never listen to YouTubers. In contrast, Australia's registered $3.7 billion in transactions, down 26% year-on-year, as office volumes responded to the ongoing impact of hybrid work. Notably, JLL's latest Future of Work research showed Australia's corporate real estate leaders' view of the workplace is evolving as the hybrid work model continues to rise in popularity, with 45% of CRE executives viewing collaborative working as the primary purpose of office space. Wow. That's a huge culture change, isn't it? That's a really huge culture change. So that means, thinking as a designer, that means you'd have meeting spaces, collaborative workshop spaces of different scales, maybe hot desks, no dedicated offices. The only dedicated space would be maybe for a reception meeting area. Probably have some, a bit more of a decked out kitchenette to allow for food and catering, because when people are coming together, it's probably rarer and more of a bigger deal. So you want to go the whole day and you have food provided. Okay, this is interesting. This is exciting. So, moving to other parts of the region, data showed China investment volumes reached $6.9 billion in the first quarter, representing a decline of 17% year-on-year, with limited activity outside Shanghai. Meanwhile, Hong Kong transactions moderated to $1.6 billion. As JLL noted, the majority of the deals executed during the period were primarily small and mid-sized private capital transactions. In Singapore, investment volumes also declined sharply by 67% annually to $1.9 billion, driven by limited activity in the office and retail sectors compared to a high base in the previous year. Stuart Crow, chief executive for JLL's capital markets in APAC, has commented on the challenging nature of the markets, highlighting investors' concerns that the tightening of lending standards will create additional uncertainty in the commercial real estate sector. Notably, all major sectors of APAC's commercial market took a hit in the recent quarter. Office market investment fell to $12.7 billion from $17.3 a year earlier, one of the sector's softest quarters on record, as interest rate hikes and asset repricing affected trading. Similarly, investment volumes in the logistics and industry sector fell by 24% annually as the number of $100 million plus transactions declined due to a new cycle of price discovery and funding challenges. Investment activity remained muted in the retail sector, recording a $5.3 billion worth of transactions in the first quarter of 2023, below the 5-year quarterly average of 7.5. In the first quarter of the year, large-scale shopping mall trades also largely disappeared in the region. Investment in the Asia-Pacific region's hotel market totaled $2.4 billion for the quarter, down 30% year-on-year, despite a strong rebound in hotel trading performance as macroeconomic influences weighed on sentiment. Despite investment down by a significant margin and market players bracing themselves for the stormy weather ahead, Mr. Stewart said Asia Pacific remains more insulated, and we're confident that liquidity risk is well contained in the region, and a resumption of activity is a matter of when and not if. According to Pamela Ambler, head of investor intelligence at Asia Pacific at JLL, the region may be lagging behind in the current price adjustment cycle, but she does not expect prices to see a significant correction. We expect the level of repricing to peak in the second quarter of 23 and then moderate in the later half of this year, as borrowing costs are expected to come off with potential rate cuts going forward, she concluded. So there we go, everyone. Let's have a bit of a talk about that. I'm thinking back to all of the articles and the fear surrounding the Chinese property sector, and how we had big collapses and corrections, and many were suggesting it was the next big GFC and everything was going to collapse, and nothing happened. Nothing happened. Oh, there we go. We've got a bit of a slowdown in this sector. We'll have to see what goes on moving forward. What do you reckon, everyone? Are you worried? It's interesting to see the trends here in Australia. I think it'll have design implications, and it may mean businesses could save money by reducing the footprint that they need in some commercial offices. As always, thanks for watching. Check out HeiseBIM or Heise Does. And if you're a fan of the channel and want to support us, you can on YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care. Have a great day. I'll see you next time.